The major averages are in the green as the S&P closes in on an all-time high. My next guest has been bullish all year and thinks the stage is set for a solid 2024. Let's bring in Carson Group Chief Market Strategist Ryan Detrick. Ryan, it's great to have you. Describe the setup now versus where it was a year ago, and what are the main things that you think are worth emphasizing in terms of feeding into a potential continuation of this uptrend?
Yeah, Mike, thanks for having me back, and Happy New Year's to all the listeners out there coming up. And I mean, a year ago, right, everyone was bearish. Everyone felt one way. We know that. Now we're looking at a 20% gain. I think there's a lot of ways we can talk about this. Bottom line, on the Carson team, we still see no recession, right? We still see real wages making new highs. We still see an economy making 150 to 200,000 jobs every month. Manufacturing and housing both coming back. So if you don't have a recession next year, which again, we didn't expect to this year, we don't see one next year. We think this trend can continue. Just one way to look at it, Mike. I mean, who knows? We might hit all-time highs today, maybe tomorrow, maybe next week. When you go at least a year without all-time highs on the S&P 500, like we're going to, I found 14 times, going back to 1950, we went that long with an all-time high. After you make that first all-time high, Mike, a year later, up 13 out of 14, about 15% average return. Put a bow on this. New highs are bullish. When you go a while without one, it still could be a pretty good market next year for investors.
And so you mentioned that everybody was very bearish a year ago, and there's no doubt about it. People were not convinced that the market low was in from a few months earlier. Overwhelming calls for a recession. Earnings were still on the decline. The Fed still had more to do. Don't you feel as if the attitudes have been reset to a degree this year to where maybe the capacity to surprise to the upside is reduced?
Yeah, I can't disagree with you there. I mean, there's still some calls, or you see what the average strategist is saying. It's still very few people expect to see double-digit returns next year. So it's modified. And you look in history, when you gain 20%, you tend to usually not gain 20%, or at least more the next year is what I should say. I know the 90s, we saw a string of 20% years. But, more modest. We think, Mike, I mean, low double-digit returns is likely next year for at least the S&P. But I know I've come on with you guys for a while. I'm a judge for a while saying we like small and mid caps. I know everybody likes small and mid caps now because they're having one of their best months ever. We've liked them for a while. We still think that broadening out theme is the next stage of the bull market next year. So small, mid cap industrials, we think those are some areas that are going to do pretty good next year. It's not all about tech. It's not all about 7 stocks. We think that's a good thing for investors.
For sure. I mean, one of the, broad disclaimers you're going to hear people offer about next year as well, it's an election year. A lot of times the market is sort of held in check for a while as things clarify about how the election might play out or who's going to be involved. So what does that mean to you, if anything, in terms of how we should set our expectations?
No, that's a great point. I mean, the first half of election years normally don't do all that well, but I think what really matters, we're hearing this a lot from our Carson partners and their clients. It's an election year. What does it mean? Well, Mike, the last 10 times we had a first-term president, the election year was higher, right? I mean, the 10 out of 10 is not too bad, and we think it'll happen again. That's when you have a lame duck president, 1960, 2000, 2008, when we've had some trouble. So again, that's just one reason to look at it, one way to look at it. But still, I think it's important to point that out to people. One more, Mike, we're going to have a 10% gain these final 2 months of the year, right? Unless we really have some trouble tomorrow. I don't anticipate that. So what does it mean when you're up a lot the last 2 months of the year? Incredibly, Mike, the first quarter returns higher every time, up like 6% on average, and the full next year has never been lower, up 20% on average. Again, what's that telling us? A big end of a year rally like this is not consistent with the end of a bull market. It usually means that upward momentum, that slingshot, is going to continue.